Greetings and welcome back to another discussion on my channel. I am joined today by my friend Eugene Chargrain, who incidentally has a very nice investment and finance channel that I strongly recommend you subscribing to, especially if you have an interest in those topics. And we're going to be talking about GameStop and all things related. I am not an expert in financial advice, but somebody who knows a little bit more about this than me. Please, I'll hand the podium over to you, Eugene.
Thanks for having me on the talk. Having a great time as always. Also, thank you for plugging my videos the last 2 days in your community section. Before we begin, this is very important, and I have to say this as a disclaimer of sorts. Neither myself or Thinking-Ape are financial services of any kind or investment professionals of any kind, and this is not investment advice. Do your own research. This content is intended to be used and must be used for entertainment purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find in these videos and wish to rely upon, whether for the purpose of making an investment decision or otherwise. This investing discussion today in this YouTube video you're watching is an opinion/podcast. Neither myself nor Thinking-Ape is a broker or dealer of securities. We are not investment advisors, and we have no access to non-public information about publicly traded securities. And this is not a place for the giving or receiving of financial advice concerning investment decisions, or tax or legal advice. We are not regulated by any significant financial services authorities, and the values of shares and investments and the income derived from them can go up and down depending on your investments. Investors, when they choose to invest, may not get back the amount they've invested in any security, related to this video or otherwise, and losing all of your investment is a very real risk. Past performance is not a guide to future performance when investing. So, it's good to start off with, I think, a basic summary of what's going on. I'm sure just about everyone has heard about the GameStop controversy now. This is ironically, one of the biggest events, I would say, socially or even politically speaking, maybe since the last summer or the coronavirus itself. And I know for a fact I've been just walking down the street and I've heard, unrelated on the radio, people talking about GameStop. And for those of you who don't know, and for those of you who your only experience with GameStop is that once upon a time it was a store you'd go into buy console games, or a console supply here or there in the days of games like Halo 3, for example. Very recently, the stock price of GameStop, which to everyone else is a failing strip mall company, went from around the $3 range to now, just before the weekend, into the $300 range. And what happened with that is that last summer there were a few investors on the Wall Street Bets forum on Reddit who looked into this company, and they noticed that GameStop had a significant amount of cash built up from their glory days before digital downloads dominated the gaming industry. And so they found that GameStop actually had very little low risk of bankruptcy. Then also recently, Michael J. Burry, who people probably know from The Big Short, which is a movie about the 2008 financial collapse, and essentially he was one of three people to identify that collapse and also profit from it before it happened, before the entire housing crisis happened in the United States. He was also invested heavily in GameStop, which seemed totally counter to what everyone is thinking, right? So people were thinking that a strip mall gaming retailer in the coronavirus days, and also number two in the days of downloads of the internet, people were assuming this company was over. And then thirdly, very recently, Stephen Cohen, an activist investor of sorts, also took up, I think it was around a 15% position in the company, intending to turn it around like he had done with Chewy.com. So all of these were signs that GameStop wasn't in as much trouble as people were thinking. But then simultaneously, there were a few hedge funds, the biggest of which now people may have heard of is Melvin Capital. They took up, and reports vary on this, they took up what's something called as a short position on this company, essentially betting that the stock would go down. The trouble was, though, that they were betting that the stock would go down with more shares than the company had in circulation, let alone the float of the company. So some people estimated they were 130% short the company. Some people were estimating on Fortune. I saw
Brief question for my own edification would also be helpful to the audience who are not involved in investment. How, in fact, does a hedge fund engage in what I guess could describe as overshorting when they can't even cover their positions? I mean, what you're describing right now sounds like a situation where effectively the average Joe who over borrows or just blows up his credit card. Not, it sounds like some kind of analog to that, effectively.
It's a little bit, but it's also just simply not something that a normal person can do. So again, this hedge fund, Melvin Capital, they borrowed 130% at the lower end of the estimation of all shares in existence of GameStop, not even just the ones that are traded on exchanges. And usually you can accomplish this a few different ways. You can buy options, which essentially are contracts that you make with your brokerage in lots of 100 shares saying, okay, I'm going to trade based on this contract, which is a promise to buy 100 shares. And so through that, it's a derivative, which that means through the properties of the contract, it's in effect creating more shares in existence. That's a little bit contiguous. A normal person can't do that. But in the case of Melvin Capital, it's actually a big gray area question mark, even as to how they would have borrowed that many shares in the first place when they simply didn't exist, probably relying a lot on options contracts. And so what that's called is naked shorting. There are some people who say it should be illegal because you're borrowing more shares than exist in the entire company, right? So, for example, a normal person, you can't sell a house you don't own. You can't sell a car you don't own. Sure, you can rack up credit card debt, but that's still not selling an asset you don't actually own. So it's
Mm.
very, very complicated in the financial sense. And you're completely right with your gut instinct that it sounds like something people or investment firms shouldn't be able to do, but in fact, they did do in this circumstance.
And I'd imagine, when I first started finding out about this, I mean, full disclosure, I don't claim to be an expert in anything, but finances. I'm not an investor, and it's not even a particular interest of mine, generally speaking. But when I found out about this, it just struck me that the vast majority of people are probably absolutely not privy to these sorts of activities. It's like space magic, and in a similar sense to what happened back in 2008, there are things going behind the scenes that some guy who's a carpenter, maybe he's just doing his job, he has no idea, and all of a sudden on the ground level, when the fecal matter hits the fan, so to speak, the average Joe gets hit. I'm not saying that this is expanded into the sort of 2008 housing crisis levels, but that seems the nature of this in general. These really arcane practices that your average person has no access to and then learns about, and it just sounds really strange and something that no normal person could do or ever would do.
All of this is happening on paper, and the simplest way of explaining what the hedge fund was doing is that they were making these paper contracts with their brokerage, essentially betting that GameStop would collapse, and when it does, we want to collect on the minimum 130% of the value of that company going out of existence. And as an investor, even assuming you could, but just even in terms of what's physically possible, the most an investor could do is borrow however much the brokerage is willing to lend them or against what they actually own in their brokerage. So there's no way you or I could borrow 130% of a company that's in existence. It's just not possible. What likely happened was that in this particular hedge fund's case, that they had some arrangement, their brokerage or even their bank, and that was allowed to progress. And I'm sure this actually does happen a lot of the time. There are cases where people over short more than they should. I mean, I'm used to seeing things like up to 80%. This is actually the first time I've actually looked closely and saw that it was 130%, sometimes up to 200% of all the shares. But the interesting thing of this is how people on Reddit for the first time, this is different than 2008, where just a few people figured out the housing crash was coming. On Reddit, people actually figured out how to turn that around. So the first person who just simply decided that GameStop would be a good buy and wanted to invest it, started the ball rolling, but he didn't figure out, and what other people were starting to figure out as well was that, okay, so this hedge fund and a few others are shorting GameStop, but the problem is they've borrowed more shares betting that the company will go down than exist in the entire world. So if we just buy shares of GameStop and don't sell, at some point they have to turn around and buy the shares back from us. This is putting it very simply. Um, and if we as investors don't sell, we dictate the price because at some point their shorts contracts will come up. They'll have to cover their shorts, as in buy back the stock to end their bet that the stock price will go down. So how a short works is that you borrow a certain number of shares of a company. And in this case, the hedge fund borrowed effectively 130% of all shares in existence. So at that time, you get the value of all those shares. So let's say you have a stock, the whole company is worth $1 million, and you borrow 1,000 shares, boom, each one's $100,000 each. So when you're borrowing, for example, 100% of the shares at a company, then that point you would get $1 million worth of money going into your account because you've started the short. And then if the stock price fell down to $500,000, you would do something called covering your short, was now you have to pay back $500,000 to the brokerage, but because you're only paying half of what you put up front, you get to keep $500,000. And that's the most simplest way I can explain it. There's still even more that goes into it, but you can see how this is why people don't really like our financial system, and they don't like what it's done to the economy. And essentially they realize that it's moving money around. In a way, it's paper trickery, where people sitting in hedge fund offices and on Wall Street, for some reason, all the money seems to flow to them, except for this one case this week. The money always seems to flow to them today, yet they're not producing labor. They're just, again, playing around with contracts and moving paper around. And so that's what's going on with the GameStop thing. And so what quickly happened, though, is eventually the hedge fund needs to buy back the shares, right? Because they started the short, and let's say, for example, in another company, it's $1 million. They want to now buy back at $500,000, but all of a sudden, the shares aren't there. They can't buy them because retail investors have bought them up. And so then naturally, the hedge fund would say, okay, well then let's pay $800,000 out of the original $1 million companies. The shares still aren't there. So then naturally, you would say to yourself after that, okay, well then I'll pay $1 million just to break even, and there's just not enough shares to buy. So then that's how you can see where the price would go up and up and up and up and up to the point where, again, GameStop is going from a few dollars to over $300. We're talking gains in the realm of thousands of percent, if not more, for some of these Reddit investors. And all this was done by looking at publicly disclosed filings, which most people who aren't sophisticated with investing will never do. Increasingly these days, there are more people who are becoming more sophisticated with investing, and I want to teach them about that on my channel where possible, as a educational and entertainment format only on my channel, obviously. And so they figured that out, and a lot of people bought the stock knowing that eventually this hedge fund will have to pay any price they can whatsoever to buy back their short shares, and that's what caused the blow up with GameStop that we all saw this week.
And point to as a layperson, the sorcery that takes place in Wall Street and sort of I call it money moving seems so counterintuitive to any conventional notion of what we regard as sort of productive labor or something that sort of benefits both the person and the community. I mean, I'm going way back here, but imagine an old school shoemaker that would make shoes for something like that. It's just, it does. Now, I know I'm curious because I'm going to ask you now. There are all sorts of strange, even more arcane arguments why financial services industries, i.e., Wall Street, that they're actually essential, and without them, there would be no economy. But I've heard various counter arguments. I'm curious of your own view of that. I mean, if we only had an economy based on effectively some kind of productive labor, traditional exchange of goods, even if it's digital, whatever. Like in a sense, I'm offering digital goods by my content, whatever. But without the funny money moving Wall Street trickery, I'm just not, I'm not an expert, but do you really think everything would just collapse in on itself? I mean, assuming, yeah, given enough sufficient time. What is your view on that?
Certainly in the past, that wasn't necessary. I mean, it depends which way you're phrasing the question. Are you saying that we don't need, for example, the banking system, debt, or even just Wall Street itself, which is many steps down the line of that? Which one are you referring to?
Well, yeah, it just goes to show the layers of complexity here. I would say, well, primarily focus on Wall Street. I'm trying to see what value they're actually bringing to the economy. Whereas,
Sure. Then I'll go down the line and start from the most simple to the most complex that they're doing. So, the most simple, and by the way, I like the stock market, and I would like for the stock market to continue to exist just in a fair and more equitable way, which I don't think it is right now, frankly. And we'll get into how probably the markets are rigged later if we can. So the very most basic thing that the stock market and Wall Street does is making sure that companies are capitalized. And what I mean by that is that they have access to public money where they can raise by selling their stocks to fund profitable endeavors, right? So you have a company and they want to build a new plant that'll give more of us cars, and they know that it'll be profitable. They want to sell shares and certificates of their company on that exchange. The problem is, though, is that if no one's buying, then those shares don't really have value and they can't raise money. And then they'd have to take on a different approach, which is going into debt and then paying an interest rate. And that's going to put more of a strain on their enterprise. And I think that's very easier for people to understand that it's totally reasonable that in exchange for ownership, companies should, I think it's completely fair that they should have access to capital as this being a tool of one of their many tools in their pocket, right? So one tool is again going to a bank and getting a loan or getting a subsidy from the government or raising their money on a stock exchange. And I think everyone's totally fine with that. And I think everyone's perfectly happy with that. But then, as you would guess, as you move further down the stream, the stock market becomes a lot more complicated from going as things as relatively simple as shorts to these hugely complicated derivative schemes and contracts that caused the housing market to blow up in 2008. Um, I don't think, and this is just a question of how you think the economy and society should be structured. I think this is a great example that I don't think firms should be allowed to short more shares than exists. I don't think you should be allowed to short 130% of a company and doing a naked short of a company like that. It's potentially very, very destructive. And I think they know that and everyone knows that, right? Because if a bet blows up like with the derivatives contracts that happened during 2008, so much money is lost that the only possible solution is that, the government has to step in, right? If you're losing trillions of dollars, there's no way any company could ever pay that back. And so naturally the taxpayer steps in. And that's the rationale for why these huge derivative contracts bets if probably be more regulated, if not illegal in some circumstances. I won't say which ones. And even GameStop is a good example of this, right? So let's say the price of GameStop went as part of the short squeeze to $1 million per share. There's no way the hedge fund could ever pay that back. So then what would happen? The hedge fund would blow up in a second, and then the bank or the market maker would take on those short contracts. And how are they going to pay it? They can't pay it. So it moves further up the chain all the way up to the Federal Reserve or even the Treasury to a lesser extent. And then guess who ends up paying for it? So that's why people have criticized Wall Street for all these years is that you can do these bets where it's essentially if those bets blow up, it's such a big problem that they know that if this goes bad, the state or the monetary policy is going to have to pay for this. So it's essentially an I win, you lose kind of scenario where they know it's like, okay, if things go well, we get to keep the profits. And if they blow up, we get a bailout. And so that's the criticism of Wall Street, if that answers your question.
Yeah. Yeah, it definitely does. The interesting thing that was glaringly apparent in all this as well was the fact that these money movers are not interested in, I hate the term sort of democratization because it's abused and democracy is it's a thing, so to speak. But the idea that your average person shouldn't have access to some of these options and that, I mean, this we'll talk about this obviously more, but the state of shock and just entitlement and privilege on the faces of some of these people when they experience loss because somebody else played the same game they did. I think Louis Rossman, the Mac repair guy who does other videos on occasion, pointed this out quite well. Stated something to the effect of, well, you know, you're not the master of the game, you're just a player, right? And so you can lose
Or at
the
least they
game.
shouldn't be.
Yeah, yeah. Um, I mean, because one thing I've been thinking about recently with respect to this is we've been living in general in a kind of zero interest world for it seems now eons, right? Like saving in any traditional sense is just non-existent for the vast majority of people.
It's
Interest
been
rate.
this way since 2007.
Yeah, it's basically this is our world is a world of zero interest rate, 0% interest rate. So it's again, okay, yeah, kind of sucks.
In the United States, anyway. I'm not familiar with Europe.
It's terrible in Europe as well. Certainly terrible in Germany and the countries I'm familiar with. It's not. It's pretty much the same thing. It's the same game everywhere. Now, it struck me thinking about this that in a world where you can't save conventionally through frugality and just sort of hard work or whatever, that there aren't many options left for your common man. And one of the few options potentially is all, albeit risky, is stock market investment. And when you don't have access to that as a common person, where are you supposed to save money? How are you supposed to create any sort of future for yourself? Because the system has prevented people just through normal frugality and saving to accumulate wealth and long-term profit. So it seems to me that if they were to do something in collusion with the government to enact some sort of legislation to prevent this sort of thing from happening in the future, a lot of people would be losing out, and it would be effectively a kind of death knell because there just aren't many options for people to save money these days. The idea of a savings account and a bank account is it's silly if not insane sometimes. Well, we're offering you a 0.000. Who cares, right? So my view of this, again, I'm far from an expert. This is one of the areas I know the least about. Is that if you're an average person, becoming aware of this and the options available, risky though they are, is something that you can make use of to try to cover your own hide and at least create some kind of sense of savings in a world which has denied you that due to perpetually 0% interest rates. I mean, what are your thoughts on that?
You're exactly hitting it on all the right points. Yeah, unfortunately, the zero to negative interest rates environment has caused a lot of damage and devastation and destruction in the economy for the reason you're saying. And that reason is the old days where you'd put your money in a bank account, get a respectable return, a respectable percentage, and that way that capital would be loaned out or invested by people who are more trained and professional in lending out money. That's no longer the case. In fact, increasingly, a lot of people think, and a lot of people see the only option for them to do anything with their money is to put it in the stock market. Because guess what? If you keep your money even in a savings account, you're getting wiped out by inflation. You're not getting an interest rate return. We've seen now during the coronavirus years, a lot of people holding euros and dollars. They're dropping in value dramatically. People are getting wiped out. Even the pound in the United Kingdom, you're you're holding currency that doesn't generate value. It's going down. You're not getting an interest rate. It's been so destructive, and that's why the last 10 years, frankly, especially for people who didn't invest, a lot of people's net worths simply did not increase this past 10 years, or if they did, it was only due to slowly increasing wages. The last 10 years economically for people have not been that great for people. And a lot of that has to do with 0 to negative% interest rates that also, for the few people who have forced themselves to learn about investing when probably they shouldn't be, or they should be doing something else with their time, they've been forced to learn about investing because what's the only alternatives? You have to put your money in the stock market because bank accounts, bonds, CDs, certificate of deposits, and banks, they don't pay enough. So this has created a supercharged stock market where everyone's throwing their money in, the prices get higher and higher and higher and disconnected from reality. And it's creating these huge bubbles and problems that the banking policy and Federal Reserve interest rate policy is trying to avoid. And eventually you get a day like today where people actually have, through being forced to, through no choice of their own, really, just in terms of economic sense, they've been forced to learn about the stock market. And so now hedge funds are surprised to learn that, in fact, people do know how to deal with options contracts. People do know how to read regulatory disclosures for companies' SEC filings. They do know how to do that. They taught themselves, and actually, for the first time very publicly, people are actually doing it better in some cases through a hive mind, people learning from each other on a decentralized forum. They're learning to do it better than hedge funds, and that was the big shock. Now, unfortunately, rather than accepting this playing field, which a lot of people frankly don't even want to be on. Most people don't actually want to be in the stock market, except for the few times recently when people are seeing other people making huge money, allegedly, on companies like GameStop. That's the few times I've seen normal people really want to get into investing. I'm very happy they should. They are. I mean, I think a lot of people should learn more and learn as much as possible about investing. Um, the response, unfortunately, to this, people finally educating themselves in how to deal with derivatives, deal with options, deal with trading, deal with shorts, is that the hedge funds responded by rigging the game. And before I move on to how effectively the stock market was rigged during this whole GameStop debacle, let me know if you have any questions about that.
Well, no, I would just add that oftentimes the solutions proposed for those who are not well moneyed are just ludicrous. I've encountered a number of people who, they're probably right. The property investment is a good thing. Well, how do you invest in property if you don't have the capital to do so? It's a notoriously expensive endeavor. These are people who are
Financially, that makes the most sense, but as you're saying, it's not practical for everybody. And where would the world be if everyone was a landlord?
not just that, it's
That's not
just
advice for everyone.
to point out, as I was mentioning in my previous video, I've said many times this. the disconnect between the haves and the haves is this because only a person as disconnected as one could possibly be would suggest to a person of few means, oh, just buy some property. When somebody is just trying to make ends meet and get by, how on earth is this? And so it's just that's another element here that I just wanted to add that I think part of the fuel behind this from sort of a social perspective is just people are living in completely different worlds to some extent. And so the people who were able to escape the zero negative interest rate dilemma are the people that would have done well regardless. Whereas the little
Indeed.
man, who formerly had relying on, let's say, something like 70s style interest rates of 8% or whatever, that's how they saved up for retirement, among other things.
The only people who have done well the past 10 years are people who have been in stocks and equities.
Yeah,
That's it.
yeah.
Everyone
So
else, you've seen your real net worth probably get halved these last 10 years, if not worse. I
yeah,
think
so
everyone's aware of that.
it's just and I think that that's something that I mean, this is more my angle, the sort of anthropological social angle that long term there's never been a situation in any civilization where you have this a sustainable scenario where people you want to call them nobility. I don't think they're particularly noble, but sort of the higher ups are so disconnected from the people around them. They can do it for a while. They can live in their gated communities. They can pretend everything is that their existence, their plane of existence is fundamentally separate from everyone else's. But if anything, this GameStop action seems to suggest that they too are vulnerable, and that is, they're vulnerable to people's discontent. It's the transformation, particularly in the United States. It's mind-boggling when you think we've gone from play at time when wealthy people in the 50s wanted to actively show up at museum openings because they don't had donated to them to show their goodwill to people. And I saw some of these interviews who just have open disdain for the common man and his struggle. What do they think is going to happen? I'm just throwing the question
Well,
out
it's
there.
interesting too. I'm old enough to remember this, and you're old enough certainly to remember this. Is that remember when the old financial advice used to be just save up your money?
Yeah,
And remember, like they would say, just create a budget and save. That used to be the be all end all of advice, and that was because you could put money in a savings account or a CD or something else, and that would be the end of it. And that's how I really think it should be. I don't like 0 to negative % interest rates. I'm sure you remember that as well.
oh yeah. I mean, I heard stories of 9, 10, ridiculous interest rates that allowed people to save significantly over the years. And I remember being lectured to by my father growing up. I mean, had even less of an idea of stuff as a child or a teenager. It was, don't engage in risky endeavors. Save your money. It's really old school advice predicated on a reality that doesn't exist anymore.
Yeah,
Good
it's funny because
intentions,
now
but
the savings account is the stock market, and instead of a bank or savings account, the stock market is a place where you have predators gunning for your money every second, every trade, every nanosecond in the case of high frequency trading.
no.
And just speaking societally, I don't think that's a good arrangement. I don't think everyone should be in the stock market.
Yeah, it's and again, I would stress the indifference these people have to the societies they live in. They don't particularly care as long as they get bailed out and they're fine, but the financial havoc that they're wrecking across civilization. And this is not, I want to just point this out. This is not me. I'm sure I'll be accused of being a communist or anything like this. It's just that as much as civilizations and societies are outgrowths of effectively biological organisms which have to be regulated by principles of equilibrium. I'd argue that socioeconomic equilibrium is also important. This is not about myself. I don't care if somebody's wealthy, more power to them. It's about deliberate malice in some cases, manipulation, and fundamentally making the system unfair such that people unnecessarily suffer. And you can't long term have this has never worked have a functional society in that state of disequilibrium. It just doesn't work. That's my beef with this.
I agree with it too. And what this is that like the ultimate kicking down the can down the road scenario, right? The more you wipe out people's savings with inflation, the more you make savings accounts unviable, and the more people see that through not any specific mechanism, there's no one showing up at your door to take your money. Just for whatever reason, their purchasing power goes a little bit less of a distance every month. They seem to get their belt gets tighter and tighter and tighter every quarter, every time they're looking at their finances. And you can keep doing that. And certainly that seems to be the policy of, governments in the financial system here in the West now from some time. You can keep doing that, but eventually, and this is such an old talking point, but it's true, the wealth gap between people who own property, who own stocks, et cetera, will just get larger and larger and larger. And then naturally, and you're describing it, there are so dramatic, catastrophic social consequences if you keep kicking that can down the road. But the problem is for people in charge, you lower, interest rates down a percentage or whatever else. You don't see what happens immediately. You don't know that 15 years down the line, you might see something like the great GameStop event or something like that. And so in reality, I think the big trouble is that the unseen yet inevitable negative social consequences of having a world where everyone has to use the stock market essentially as a savings account. I mean, I'm speaking very abstractly here, but it's true. And a lot of people simply are investing in the stock market because they're just on for the ride. They know it's a balloon going up and up and up. But what's the alternative? If you stay on the ground, your your money, your net worth, your savings gets wiped out by real negative interest rates or inflation.
And the concern as well, having looked a little bit into this, is it wouldn't surprise me if these people, the Wall Street sharks, in collaboration with the government, try to enact some legislation to prevent the sorts of things that took place with GameStop, prevent your average Joe, your normal person, from basically trying to create savings. And then what do you have? It's just, it's very alarming, to say the least.
They're not necessarily against you having savings per se. They just didn't like, really, again, trying to read other people's minds here, but I just don't think that they didn't like that for one time the game got turned around and one time, for example, people won. I mean, there are estimates any for all over the chart, but essentially the normal person, the average person, liberated billions of dollars from hedge funds. And they really, 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 by their actions, I can tell, didn't like that, right? So immediately the media mobilized. I've never, ever, ever seen the media mobilize as fast as it did over GameStop.
I
Over
mean,
GameStop. Yeah, please continue.
GameStop is just nomenclature. I mean, you could swap out it could be, I think you mentioned to me privately, Beds Bath and Beyond. It could be a company that makes
AMC
spices,
movie theaters, silver, Bitcoin, whatever you
whatever
like.
whatever it is, right?
Dogecoin.
The nomenclature is irrelevant. Ultimately, it's about the actions that are happening within.
Right. I was being a bit
No,
dramatic
no,
there,
no,
yeah.
no. I totally, no, I agree with you. It's just, I could see this happening with anything potentially with the same situation. But yeah, the fact that the media has just jumped largely on the side of game. Tucker Carlson did not actually, but he's been quite sort of power of the people for a number of years now. I think he had some epiphany where a while back, after he had listened to people rambling on about GDP, we all our favorite GDP guru,
Yeah.
Mr. Shapiro.
Thinking about his children, probably.
Yeah, yeah.
What
Guys,
is GDP going to do for my
I
children?
don't see what the problem is. GDP's up 7.3%, and you shouldn't be complaining. You do a good job. Move states, no problem.
Yeah.
I mean,
GDP is up. That's not denied, at least not until last year anyway. But where did that GDP go? Everyone's seen the charts.
I
Again, the
forgot
equity
who
holders, the billionaires, their net worth doubled the last 10 years. Did your net worth double? No.
I forgot the gentleman who created the concept of GDP off the top of my head. I'd have to look it up again. I remember a while back doing some research that he never meant it to be a metric of general societal health, but effectively that's what it's become. It's GDP. It stands for almost. I don't know how you could create a like gross domestic health state or so. I mean, okay, well, you have to
Yeah.
add the P in. I don't know, but the point is, it's become this sort of catch-all phrase that is meant to sort of shut down arguments that GDP just doesn't cover everything. I've talked about this many times on my channel, but people need a sense of connectedness, community. They need to feel that they're part of something. They need to feel like life isn't hopeless. It doesn't help you if you're in the middle of some town in Ohio that's falling apart at the seams, always in a state of temptation because of despair, for opioids that
Well, Ben Shapiro says GDP's up a couple of percentage points. I don't see the problem.
it just doesn't work. I mean, of course, Ben Shapiro doesn't care about it, that type of guy, but it's and people, it's fascinating. I find that a guy like Tucker Carlson, who's on a major news network, Fox, is routinely allowed to sort of take that line. Now, it could be just cynical, maybe he's drawing his taking sides to garner support. And we've observed politicians in the wake of this clearly thinking about what course of action to take. Well, okay, let's see. If I side with the Wall Street folk, then I guess I'll keep my pockets lined for a while. But if I side with the common folk,
Yeah, but then everyone will hate you.
yeah, if I side with the common
This is one
folk,
of the most uniting issues I've seen in a long time.
yeah, a number of people have pointed this out. This does not seem to be something that, I mean, nobody likes this degree of unfairness. The right doesn't like it in the sense that they're typically about hard work and pulling yourself out your bootstraps. And so the fact that Wall Street, they're less. I think the right would be less concerned about the harm it's causing, more about the fact that in this case, Melvin Capital failed, and they should have been allowed to fail. And the left doesn't like it because it's closing out possibilities and harming people that who actually, I think you mentioned in one of your videos, a divorced father who previously, due to lack of funds, couldn't fight his ex-wife for custody of the kid, and this enabled him the money he got from this investment to do so. So it's kind of whatever angle you're looking at in interpretation, nobody really is on board with what happened. And I think the politicians, I mean, I'm totally cynical about them. I don't really think that Ted Cruz particularly cares about the plight of the common working American, but I do think that they know that that is a possible political angle they can walk and take, and it might in fact be beneficial to them in the long term.
Yeah, you've seen a few politicians jump in on this. The ones where they're supposed to be more people facing. So, for example, AOC and Ted Cruz are the two main examples, right?
Yeah.
They actually both signaled in support of the Wall Street Bets people. For people who are more politically experienced, though, you realize that it's just talk, right? So, AOC and Ted Cruz, their role is whenever there are people the public really hate, they always pull them in for questioning, ask them really, really sharp, directed questions. But then when the vote comes, surprise, surprise, nothing happens. And so I consider AOC and Ted Cruz in the same bag. And as for you're talking about the social good from the liberated hedge fund money, there's more than that. Yeah, there was the guy who's going through a nasty divorce, literally on the edge of thinking about what to do with his life. I won't say any more than that. I've seen Lyme disease treatments be paid for. I've seen people pay off their student loans in their entirety. I've seen people get cars. I've seen people restart education. And I'd love for you to hear what you think on this. It's really crazy to think where with just a few billion dollars or however much it was liberated from a hedge fund, so to speak, how much social good it was. And I immediately, my mind was open to, I wonder what would happen though if this were done on a larger scale and not as like an effective loophole or gimmick or glitch in the stock market.
Sure. I mean, small businesses, people who are in situations like the ones you described, a reality in the United States is, medical treatment, good treatment, quality treatment is expensive. There are situations I've read about where it's kind of horrifying to think about, but family members literally take one for the team. It's like, well, we could get this treatment, but that would blow all of our savings because it costs $700,000. So,
Yeah, they would take everything to keep me going. Yeah,
yeah,
it's
just
really,
just
really
I'll take
tragic.
one for the team and drop dead for your sake or something like that. So
Oh,
I
that's
think
tragic.
things like that could definitely be ameliorated. And I mean, again, I don't have any problem with wealthy people. I'm not in the business of class
None of
or
us here, and I assume you are the same way. We don't have a problem with capital allocation or
no,
making sure
no,
that businesses get funding. We're talking about eventually playing a
yeah,
game with people's money.
yeah. And I think it's just if m- I mean the funny thing I think about all of this, or the really intriguing thing is, if you think about what is it, 330, 40 million people these days in the United States, I forgot, I've lost count, but the people who are savvy and aware of this are still a tiny, tiny fraction. Imagine if a couple of percentage points of that were to go up, that would that could do some serious damage. At the end of the day, for example, this thing about the politician's concern. The politician's concern is largely a concern of, am I going to get reelected? If you had a massive right and left convergence on, we don't like what's going on in Wall Street, and I mean, do mean massive. We're talking about maybe tens of millions of people. politicians would have little option but to just turn to the side of the common folk. Now, again, this I just want to cover the base. I'm not talking about class struggle. It's just that what's been going on here has just been fundamentally dishonest, and this is not about people through their own diligence and hard work and ingenuity. If anything, you've pointed this out to me. Some of these hedge funds sound like morons to me in the kinds of decisions they make. I mean, they don't sound particularly smart sometimes. We're told that they're these grand financiers and magnates who understand things that we, the peons, cannot. But it doesn't strike me, I mean, as that is always the case.
No, it doesn't seem to be. And this week has shown that the reason those people got in those positions is not a product of meritocracy. They got there because over the course of decades and people before them, the system has become increasingly more rigged. Circling back just though for a brief second on you're talking about politicians and wanting to get reelected. I think we've seen over the past 2 decades, the results are in. No popular issue ever gets forced through. A politician doesn't really care about reelection. They care about their standing with donors, right? So when someone's in office, you're just seeing a brief glimmer of their political life. So when they leave office, then they enter the lobbyist pipeline, the NGO pipeline, the political organization, the super PAC pipeline. There's always a position and a fat paycheck waiting for them. They don't care about being reelected. They care about staying on the right side of their donors. And so that's why
True.
you don't see action.
I'm thinking more about maybe the European system where
Right.
there's lobbying, but it's not as significant as the United States.
Yeah,
That's
less of a
true.
parachute, I suppose. But these hedge fund guys, no, they're not as competent as they would lead you to believe. They're not the super untouchable professionals. They don't, despite what they condescend on TV. No, people in fact can and did learn how to invest, even with something as complicated and potentially dangerous as options contracts. And they got defeated just by the collective consciousness of the public. But and frankly, I'm going to say this straightforward. I love the stock market. I love investing. I love finance. And on paper, the stock market should be the most fair, equitable environment to democratize finance and investing, right? Everybody should be able to buy in. Everybody should be able to get in a share, and everybody should be able to do their research. And if they're smart and capable and dedicated, they should outperform people. But that's not what happened. So, for example, when the GameStop trade went south for the hedge fund, what happened? Again, you saw the media mobilized faster than on any social issue I've ever seen before. And everyone has their own list of pet social issues, right? Student loan debt, the opioid crisis, foreign policy wars, whatever you like. I've never seen the media mobilize as fast as they did for a hedge fund getting blown out on GameStop. That's number one. And then number two, when the GameStop affair started going out of hand, the price of the stock was surging up. The hedge fund probably still had not covered. They were in a deep, deep danger zone. What happened? All of a sudden, every single brokerage at the same time had an outage. They weren't working. And it's funny because I actually was on my brokerage at that same time experimenting, trying to figure out what was going on with GameStop. The interface worked just fine when I was trying to cancel an order to buy GameStop. And this is just one example. Don't look too much into it. Buying it, though, for some reason, when you put in a buy order for GameStop, the page would get super slow. It wasn't responsive, but cancel, boom, it was like that. My opinion is my impression, based on what I saw, was that they were buys of GameStop were not encouraged. So that was the first thing. There was an outage of all the brokerages. And then later on some brokerages, they announced you can only sell GameStop. And you don't have to even know a lot about finance to know that if you can only sell something, you can't buy something, the price is going to go down. And that's what happened. The price of GameStop in a matter of just a few minutes, it was falling anywhere from 30 to 50%. It was just a massive loss. And then following up that later in the coming days, there were announcements now. The most you can buy is 1 share of GameStop stock on some brokerages. And so what that tells you, that I know there's all these kinds of excuses, but what that tells you is that when things don't go right for the hedge funds, the market just gets rigged. And there were even the SEC was announcing criminal investigations. I don't see what will happen with them, but the SEC was announcing criminal investigations. Oh, the SEC can't bring criminal charges, but you understand my point. They're announcing investigations to people on these forums talking about GameStop rather than even pretending that there's any semblance of a fair market. So no, people who claim to be supposedly, financial investing elites at hedge funds, they're not, because they've just been playing a part of a system that's been rigged in their favor, and now that's very easy and transparent for all to say.
Yeah. Another plug-in I'd like to make for Eugene's channel. One of the reasons why I like that channel, and I'm not normally a finance guy. I'm not just saying this because he's a friend of mine. The way he puts his videos together is very creative. It's very accessible. You can learn a lot. It's especially true if you have no idea about finance or little idea, and it's not your main area of interest like myself. It's a great channel for that. And for the people who are more advanced, I think it might spur you on to think about things that you're already aware of. So again, that's Eugene Chargrain. I'll put a link in the low bar. Please check the channel out and subscribe.
Thank you. My goal has always been to democratize and make investing more accessible. In fact, I consider one of my greatest personal victories and successes in that was the other day when you were asking me about investing quite seriously. I won't say what, obviously, but I never
Yeah,
thought I'd get the day where you would be interested in it as well. That was a huge
yeah,
success. Not so much me, but the times, I would say. But
yeah.
still, that was
Well,
quite a day.
that's true. Yeah, I mean, I have rather arcane interests, my friends know, and these I don't even talk about these interests in my channel, but I'm generally more concerned about what happened in sub-Roman Britain between the Anglo-Saxons and the Native Britons than I am about investing. So, yeah, that's true. The story was big enough that it's compelling enough, I think, that the the social aspects in particular interested me and why people were motivated. I mean, the idea of sort of a payback, which it's hard not to get behind. That Yeah, it's compelling. I don't know if I'm going to sort of maintain the current level of interest in financial affairs or investing affairs, depending on how things pan out. But it certainly was enough to wake me up and to yeah, just think, wow, this is a powerful tool if used correctly. So definitely.
My entire social circle knows me as the investing guy, and I would say every single acquaintance I have, 100%, contacted me asking to learn about investing and how they could get started.
Yes, but I was, of
It's
course,
really a crazy time.
the most surprising since I'm about
Definitely.
as
That was
resistant
the
to,
most surprising, yeah.
yeah.
But
But
that just goes to show, though, you need to keep things accessible and entertaining, and people will come. There's nothing I don't think there's anything intrinsically, elitist or that keeps people out of investing. As long as you keep it accessible and entertaining, which is what I try to do in my channel, I think the benefits should speak for themselves. And it actually is fun. When you finally get the right mindset for it, it actually is very fun and entertaining.
what bothers me is that in a bygone age, I'm relatively frugal, as you know, I would have been that savings account guy. I would have just and just been frugal, and it would have been simple, right? That's in part why I'm so annoyed by the system, because potentially down the line I'm be forced into this sort of thing that I just don't feel comfortable with.
No,
Apart from, yeah,
yeah, I totally agree with that. And I personally love investing, but I don't think I would love to have a world again where all you had to do, the highest financial virtue, was that you just don't spend more than you make and you save it.
yeah.
And that money obviously gets invested into the economy, right? So it goes in the bank account, the bank loans it out, you collect your interest, everyone's happy. That makes it so much more simple for just people to be financially responsible, financially moral, so to speak. And those days are gone. And I really, really hope that someday we can return to that. Though obviously I'm getting more and more pessimistic about that. As much as I love that people are turning to investing and are becoming interested in it, it's bittersweet. Because I know a lot of
Well,
it's just out of desperation. There's no alternative.
I mean, it seems almost unavoidable, but I feel myself forced to bring up the topic. But obviously, it's a bit different in the United States, but in the European context, we're still experiencing massive lockdowns that have been devastating to a number of businesses and a number of sectors. And the thing I've noticed is, frankly, you don't hear a lot about the fallout from that. And there must be fallout, but they're just not talking about it. We hear a lot about the protective measures with respect to the pestilence and what have you. It's just, it's all the more reason to be concerned when normal people can't even run their business. I mean, I can't even benefit from this in the sense that I have to regularly see a massage therapist because I have terrible issues in my back due to a lifting injury some years ago. And she's not allowed to operate because technically she's not a medical professional, even though she provides a very useful and helpful
Yeah,
service.
the essential and non-essential workers, Rossman talks about this, has been so devastating for some people. If you get classified as non-essential, what are you going to do? I mean, for example, in the United States, you got $1,400 from the government last year, and that's all the help we've gotten this entire time.
Yeah, which for some people, depending on the city they live in, is enough to make rent even for a month. Some cases, maybe it's just 2 months rent tops. It's that aspect has been swept under the rug, and I think this might be. I don't like the way mass media has phrased it, to be honest, but they have called it sort of the GameStop action as sort of um, Corona boredom born motivation to do something.
I
And
just saw an interview on CNBC with a hedge fund guy saying to guys, you're sitting in your apartments looking at Robinhood. Why don't you go out and start lifting? Which actually is good advice, but why don't you start go out lifting or get a girlfriend or something? Without understanding that most people can't go outside. They're not allowed to because of these lockdowns. So actually, this seems inevitable in hindsight. What are people going to do? I'm like, hey, I'll try that. That investing app thing. I'll try that. Oh, okay. Oh, GameStop. That's funny.
and
And then look what happened. This is no different than people going out in the streets and protesting a lockdown now, like they're doing in Netherlands or Denmark. I forget which one it was.
there were some massive protests in Denmark. There was a small riot in the town of Eindhoven in the Netherlands. Not much damage.
Thank
They
you.
kicked in some shop windows, turned a car over, lit it on fire. Nothing significant by any stretch, by normal, riot standards at least.
This actually circles back to 0 to -% interest rates. Part of why they're so afraid to raise interest rates, and I won't explain how this works, but just trust me, generally, economically speaking, this is what usually happens. When interest rates go up, stocks go down. But the trouble is that interest rates have been near zero for so long. The stock market is so supercharged, so detached from actual fundamentals. And they tried this in 2018, if the interest rates start to creep up, you will see probably, in my opinion, a stock market crash overnight. But so many people have put their entire life savings or really everything they've got into this market. It is so fragile. I think they can't afford to raise interest rates, which is dangerous, right? Because the longer you keep it at zero, the more the stock market gets supercharged, the more the
Well,
wealth gap grows and grows and grows. It's dangerous.
two points there I'd like to make. One is to highlight something you said in your video. This idea, it's almost like sort of the chat advice of the insular. Oh, just hit the weights, Brian, get a haircut, and shower twice a day. I mean, you pointed out, and I
You're
think
saying, sorry to interrupt, but you're essentially saying you're looking at screens too much. Get out, do anything but attacking hedge funds through your
yeah, yeah.
investing
But the
aspect. Yeah,
point
please
you
continue.
made
Not
in
useless advice.
one of your more recent videos on this was simply that a lot of people these days, even if they wanted to get married and go down, I mean, never mind the extreme risks in a place like the United States, divorce and what have you, they're not in a position to do any of this. So as you pointed out, I mean, this is a direct paraphrase. Else are they supposed to do with their money? They managed to make 40 or $50,000 somehow, and they don't have kids, they don't have a wife, so why not? And
Yeah.
the thing that's interesting, and I think is more a social commentary than anything else, is that when in the 70s, when Paul Volcker rather famously jacked up interest rates, which everyone kind of in hindsight regards as the right call, there was a ton of pain, the stagflation stuff, basically due to various presidents overspending on Vietnam and whatever. I haven't seen any people these days who say, "Oh, it was a terrible call." No, they praised him. One, because he had the courage to make a difficult decision, but eventually the economy bounced back significantly. Now, it might be that in the kind of globalized economy we live in, which 45 years ago or what have you, simply didn't exist to that degree, and or well, it just didn't exist at all. And that way, there weren't online shops, and that there could be some unforeseen consequence if you were to massively jack up interest rates. But I'm just not financially savvy enough. We hear constantly from people, primarily from the so-called Austrian school libertarians, that eventually it's going to collapse. But it seems somehow that they figured out a way just to at least not maybe infinitely, but just for very long, just keep on kicking the can down the road. Oh, so when are we going to have a higher interest? Well, I don't know, 20 years from now. It just seems somehow to work without properly working, if you know what I mean. It's kind of it's it's like putting it's like a sort of band-aid, a renewable band-aid, basically, right? But it
Mm.
doesn't actually
Yeah, that's
solve
what I
the
was
problem.
saying. It's
Yeah.
it's kicking the can down the road. You don't see the consequences of this are so diffused, and they take such a long time to accumulate. In fact, it is a very anti-fragile economic system. I actually don't consider myself to be an Austrian. I understand that Keynesianism, except for the few weaknesses of it, actually is very anti-fragile and does in fact work. And yeah, I'm so worried that the Europe and the United States are so fragile that even something as simple as raising the interest rates once again could be the spark that sets off something much larger. And you've been right. We've talked about this in private. People from the other perspective on this have said that the economy has to collapse. There's too much debt. And they've been saying this in some cases since the 90s.
Yep,
And
I remember.
here we still are. And the reason for that is because so much of the spending has been tied up through monetary policy, through devaluing the currency, number one, locked up into huge long-term, we're talking like 80, 90-year debt that it's spread over such a long period of time. The idea is that if you just keep pushing and pushing and pushing, eventually there'll be some technological innovation that makes all that debt moot and useless. That's the hope. And then finally, and this is when they're probably more reaching the end of the road, they just know, okay, we'll just keep pumping and pumping and pumping, and then what's the result of that? Again, you get a massive wealth gap, wealth disparity between people who own property and people who own stocks versus people who don't. But you can do that for a long time. I mean, we know how stratified, for example, medieval society was. You can push that really, really far. And so you are seeing some consequences of this, but that seems to be the only downside, the only pressure valve release for Keynesianism.
Yeah, but as I pointed out, of course, in a number of times in my videos, the feudal system had noblesse oblige. It had the obligation of the manor lord to the peasants. There was some kind of complementary relationship there, however much the peasants might have suffered. That doesn't exist anymore. There's this, it's been completely cut off.
That is a problem.
And I've encountered these people in private conversation on more than one occasion. I mean, not even exceptionally wealthy, but people. I talked to a guy a few times who probably not excessively wealthy, but wealthy enough, living in nice parts of London, working in IT, who quite openly said, "You know what? I don't really care what happens to poor people. Let them off each other." Literally said that. It was very. I guess I appreciate his candor, but
Let them eat cake.
yeah, let them eat cake. It's not my problem, and I think that this is. I'm just not sure how long that aspect is sustainable because we hear it's much more permissible to say, oh yeah, the market's going to crash one day, or the dollar's going to something like that. By the way, this is my own argument. This isn't a financial argument. This is more of a political, historical observation. The reason why I don't think the dollar will, in air quotes, ever crash is because the United States has the guns. We've seen what's happened in the past when various countries decided to not want to make use of petrodollars and maybe use petro euros or other options, and it never ends well for them. You look at things like FATCA, the federal, this mandate that foreign institutions need to cooperate with the IRS to basically snoop on and reveal private information of American citizens having accounts elsewhere, on pain of penalty of transactions of somewhere upwards of 30% now if they don't comply. Basically, the United States has a monopoly on violence globally, just in terms of being a superpower still. I mean, it's not a great country anymore by any stretch, but in terms of living quality for most people. But it still has the guns. It still has bases everywhere. It still has satellites everywhere. So the idea that the dollar could just crash is, I think, largely predicated on a purely financial interpretation rather than principles of realpolitik, the idea that,
I entirely agree. It's
yeah,
only looking at the financials. It ignores the broader picture.
yeah,
That's
yeah.
exactly it.
So, if a country, I mean, I'm not making a prediction, but if for whatever reason Nigeria got uppity and said, you know what, we want to export our oil in euros or whatever, that would be a problem. For them, I think there would be some kind of intervention, for lack of a better word. Yeah. So I think that the dollar will continue to be the dollar as long as the United States has massive satellites, guns, and nuclear weapons pointed at everyone, and they can force people at the point of a gun, other countries, to do what they want.
It's entirely right, but it's also a very foreign policy angle of looking at it.
Yeah.
And I will say just broadly, people always assume what's going to happen is, oh, the dollar is going to collapse, then the big event's going to happen. I actually think no. I think you could have total collapse everywhere except for the dollar. That's how locked up the financial system is. And let's even just look at it domestically. It's the same principle as you were saying with Nigeria or anywhere else. Let's look at it domestically. If the price of anything, take for example, GameStop goes out of control, what happens? Your brokerage gets locked up. You get throttled. You can only buy so many shares or you have to sell. That's totally controlled. That's totally locked down. You don't have free price discovery in domestic United States markets. You just don't. So you can extrapolate that further to that, like Cyprus, for example. Cyprus had some nasty economic troubles in the early 2010s after 2008. And then what happened? They simply throttled. They allowed people to only withdraw a very small amount of money for their bank accounts, and they just froze everything else. And that staved off a massive, as much as they could anyway, a massive economic collapse. And so with the dollar, if you ever had it where it went to the price it actually deserves, again, they would just put in these controls. For example, they would freeze people's bank accounts, not let you withdraw, probably have price fixings. And I know that's like these very, very desperate things. It's kind of like when a star is collapsing, it increasingly has to fuse heavier and heavier elements just to keep the fusion reaction going. And that would be an example of what would happen economically with the United States. But there's so many backups and alternatives and way they can control it. For example, how GameStop was so controlled, that wasn't an avenue. There are a few things that do threaten the US dollar. And I will give some credit to the Bitcoin, gold, and silver people. They are right that those are viable alternatives. But one thing they're missing is that those prices are so heavily controlled, and they have to be, right? So if the and I totally agree with them in some cases, if the true prices of assets like silver and gold were expressed, you would in fact have a dollar collapse. But what's preventing that is effectively price control. So in gold's case, most gold is controlled, or at least claimed to be controlled, by central banks. Like, the gold held by central institutions versus the individual is so small, and the individual is so uncoordinated that the gold price is effectively under cap. And then silver, to a lesser extent, there's more silver in circulation than held by central institutions. But again, the average buyer and holder of silver is not united. They're disconnected. They stack their coins, and that's it. And plus, I won't get into it. It's complicated, but the silver market is so flooded with like essentially silver paper contracts, claims of silver that probably don't exist. Like a paper saying, "Oh, I'm selling this certificate, and it says you're entitled to this and this amount of silver," but there's restrictions on how you can redeem that silver. So that also keeps the price under control as well, by effectively expanding the supply of silver when it's not there. So all these little tools and the few avenues of escape for the dollar have been set up. And so all of this in the broad picture, I'm painting a picture of the fact that the dollar won't be collapsed because they've got guards by all the exits. And I'm not saying you couldn't rush past the guard, but it would be exceedingly difficult. And that is the measure of the strength of the system, not the calculations people are making about how there has to be an economic collapse by this year. The dollar is definitely going to collapse because of the national debt. The real power of the economic system in the West is how strong the guard is at the exits. And as you were saying, from the foreign policy standpoint, the guard is very, very strong. And it's going to be incredibly difficult to get past.
Yeah, yeah. I mean, pity the poor country that decides to rebel against its American master. We've seen what's happened when they try that. So,
that's an example. That would have been one of the escape valves from the dollar, but so many people are eager to escape it because it gets inflated so badly, but there's no escape hatch, and that's what keeps the system going.
yeah, essentially. And I think, a more holistic approach, admittedly, I tend to maybe overly focus on the foreign policy aspect, but from, someone who's old enough to remember the calls in the late 90s, oh, according to the Austrian system, the dollar's going to collapse anytime now. And you keep on hearing and hearing, and it just never happens.
It's compelling because you feel like everything they saying feels right, and logically it works out. But the reason it doesn't work is because it ignores the greater political, sociological picture. That's why.
Yeah,
It's purely economic.
effectively. Yeah. Well, if you'd like to add anything, feel free to do so. I'll do a final plug-in for Eugene Chargrain. Link in the low bar to his channel. If you want interesting videos about finance and investment for both beginners and advanced alike, I highly recommend the channel. It's very informative. It's well done, and head on over and please subscribe. I think you'll benefit from it in more ways
Thank
than
you. I
one.
really appreciate that. I would say that's about all the time I have for today, though.
Okay. Well, everyone, thanks for tuning in. It's been interesting. My friend is a lot more. This is his field, and this is kind of, as he pointed out, kind of the opposite of my field. But it's interesting to discuss these things because I can learn as much as anyone who's not really involved in this sort of thing. And these are the times when it's probably beneficial to do so. So once again, that's Eugene Chargrain. Check out the YouTube channel, link in the low bar, and head on over and hit that subscribe button and like his videos. Okay, so I'll check you guys out later. Take care until the next time. If I'm still alive, God's watch over you. Bye-bye.
If you liked this video, please like, share, and subscribe. And if you enjoy my content, please consider making a donation or becoming a patron. Thanks for watching.